All right, hello and welcome back to another weekly edition of Stock Market Mutterings, where my only job is to find you quality setups to help make that account of yours look a whole lot sexier. And who doesn't need a sexy looking account? This is for the week ending on 6/24. And before I start, remember, if you guys need help with your trading, you're struggling, you're not in tune with the market, you want to align yourself with a professional trading community, or you're just looking in that mirror every night and you're saying to yourself, I deserve better. I am better. I want better. Then visit thelinkedlist.com. Click on the Trade Room tab, and then you can come trade with us live each day. So we're going to start, as we always do, talking about the SPY. I don't know if I mentioned it. This is for the week ending on 6/24. 6/24. So let's talk about the SPY, because what we've seen is a little bit different contrast in the market that we haven't been seeing lately. First of all, I want to talk about the Dow. You've seen the Dow go through like an 8-day losing streak. Yeah, 8-day losing streak it was, 8 days straight. One of the longest it's had in a really long time. In turn, you had a pretty mellow SPY, you know, minis, E-minis for you mini traders out there. And of course the NASDAQ, the Qs, whatever instrument that you're using, they were just on fire making new highs. So you had one index there making a new high, the other one just breaking records to the downside. And I say mildly breaking records. It wasn't like a crash or anything like that. So you had a little bit of a contrast. Usually they sort of work a little bit in unison, not to a T, but you saw something that was a little bit different. What this tells you is that really what we have been saying over the last couple of weeks is that overall there's been a lot of bearish activity in the market. What has really held it up has been the FANG names, Netflix, Amazon, Google, Tesla, stuff like that. You've seen those stocks make big moves. And of course retail. Things like Lulu, DEC, Macy's, Burl, other stocks like that. So if you take those two out there, you've got a completely different complexion in the market. Now, at some point, what happens is somebody wins that battle. Even the market just becomes too weak and it spreads itself in there and everything starts to roll over, or, you know, the NASDAQ brings everything else back up. Now, where we stand today is on a Friday here, you've got the SPY starting to approach an interesting level yet again. You're back to the breakout point. You can see it down here at the bottom chart. I've already got the line set up here at 273.31. That was the last breakout. That's the breakout that we were talking about a couple of weeks ago, that if we broke out of here, we may see 280. Look, it goes right up towards 280, rolls back, and there you are, just slightly under your 20 moving average, and you're right back at that breakout point where it was. Now, why this is important is because, as they say, the old adage with technical analysis is that previous resistance becomes future support. So that previous resistance of 273 area is now the support that we're working with. And you can see the market over the last couple of days has been fighting it off. It hasn't bounced off of it aggressively, but it has been fighting it off. Now, as we progress into next week, you want to pay attention to that, because if you lose that, and guys, if you're new to trading and you're trying to understand technical analysis, or you're finding yourself confused about it, it's not just that level, it's how it reacts to that level. So what we had that last time, if we go way, way back here to early May, we had so many tests of that 200-day. It wasn't until that very last point in May, when it hit that 200-day moving average, it came off of there with a vengeance. That was letting you know, because it bounced all the time previously off the 200 moving average, but it was never really able to just start clicking out some price. That time it did. It just everybody got serious and started buying hand over fist, and then you saw the market take off. So watch that and see if you see it there. If not, that 50 moving average is right back underneath of that at 270. Somewhere you have 270, let's say 271, and hell, the 200 moving average still may come into play if you start getting weak down towards 265. So we're kind of looking back at that direction. Only time will tell if we get it. In fact, the Dow was very, very close to its 200-day moving average. Now let's move on, because there are a basket of stocks that are worthy to look at as short, and there still are a few longs. Some of these really do. Let me just start with one of my faves, NVDA. Some of these do need a pullback. And understand also, if you're new, you're somebody out there who's loving one of these companies, everybody has their own way of doing business. You know, if you're an investor, some of this stuff never matters. If you're a trader, it does. A lot of these things, I love these companies, Netflix, NVIDIA, Amazon, but man, you know, they are really, really heavy up here at these prices. They've had incredible runs. You've seen some of these. We'll talk about stuff like Wayfair. These things have been on monster runs here. They could use a break. They could use a break. At some point, they're going to get it. We're going to find out. So let me talk about NVIDIA. You can see right here, NVIDIA is starting to approach this 50-day moving average. Now, with a stock like this, from a trader's viewpoint, it's a double play. That means you got two different options with you every morning. You can either long this thing or you could short it, and you can end up, back and forth the entire day. It has that kind of range in it. It's been selling off pretty solid, and now you're down to that pivotal level. What's important is to watch how it acts at this 50-day moving average. Again, like I said just a minute ago, if it bounces off strongly, then you get a little bit of a market bounce. You might see this thing try to work its way back up to the 20 moving average, maybe even another high. If it loses that, you've got a lot of air to the downside, so I'd be looking at that too. I'd leave that option available, which is 237. So that's another $12, $13 away from where the price sits now. So some of these, they could even come down. And here's what I meant by being heavy. That thing could come down $13, $14, and overall, long term, that's still a bearish chart. Right? Not a bearish, excuse me, a bullish chart. So that's how much room they have to go before they actually turn bearish. There's a substantial, I can't even say the word. Who cares? I don't need to say the word. But watch it. I'm looking for it both ways. If it's strong, we have a strong market. We try to get a bounce. I'll look for a bounce on something like this. Otherwise, I think you get down there, you're looking at 237 and maybe even a connecting of the 200 moving average right there at 221. Now, I did just mention Wayfair. Here's another one. These things, these online retailers in general, they're just going. I mean, we saw restaurants, you name it. These things, if it's a public business, a brick and mortar business, these things are flying off, and this is not. This is Wayfair.com. That didn't sound right. Anyway, I mean, look at this chart. It's like had 3 red days since May. So I want to watch this one here. If the market starts to show some weakness, I want to look for it as a short. I don't have a particular setup right now. Just going to kind of watch it and see where it ultimately leads us to. Now, another one here. This is a trade that's been working for us pretty good. Sorry here, I'm getting all hot with this light. It's like 100 degrees here in San Diego. Anyway, KMX. I want to look at this one. I didn't pull it up. KMX. This trade has been working with stuff like DRI, a couple of these other. The earnings plays are still being given favoritism, meaning that a strong earnings runner that day really stands an above 90% chance, at least from my experiences so far, of going the next day. So there's always a day 2 play with those. I'll be looking at this thing first thing Monday morning. Just look at DRI's chart. You see it take out the previous highs from the previous day, and it turns into an all-day runner. For this one, that would be 81.62, and then if I pull up DRI, I'm going to be, you'll see what happened right here. As soon as it broke through 108.23, it just starts melting up. Sometimes they're huge runners, sometimes they're not. Another one here that's semi-bullish is HRTX. You got a pretty nice looking daily chart here, back testing the wick that it sold off on its initial gap. So watch this one. Again, even if the market is down, there are still bullish opportunities in a lot of these names. And if this continues to run, and some of these things that have, immunity sometimes are biotech plays. So watch this one, moving through 4170s, 4180s to 42. Could be a monster move. And what else do I want to look at? Spot. Spot's also kind of looking like a long. I mean, look at this daily chart, just sitting right up there. Again, it still might, this thing moves through 182.45, regardless of the market environment, you still may see a pretty good move. So all in all, what we're looking at here, because all of these names could definitely change, but what you're looking at here is you've gotten some selling into the market. The real non-participant has been the FANG names and a lot of the tech names. Watch those as leaders, because my thought here would be is if the market continues weakness, and those start to get weak, there's a lot of great shorts in stuff like Tesla and Netflix. That doesn't mean that I'm going to do it right away. There's just some spots there you really need to take a look at because they are short-term overbought. That doesn't mean that they're entitled to go down or they should go down or they're supposed to go down. It's just an idea that you have right there. So keep those in mind. Also keep in mind that, the market has been a feisty little sucker. And every time it gets down to a certain level, starts showing a few cards like it wants to break down, it finds a way to snap back. So pay attention to those snapbacks as we progress through the week, because they'll give you clues to just how interested that traders are in the certain levels that they're reaching. So anyway, hope I made a little bit of sense. I hope you make some money. If you need help, you know where I'm at. Visit thelincolnlist.com, click on the Trade Room tab. Trade with us live every day on screen. We'll show you, we'll make you a trader. We'll put trader hair on your chest. Even if you're a female, I know that sounds gross, but trust me, it's a great thing, especially when it comes to trading. Until the next Mutterings, take care, and thanks for watching.